What's up, everyone? It's Scotty with MoneyVest. So this is going to be our weekly technical update on the markets. I'm going to go over very, very important analysis, research, and technical indicators to pay attention to and levels to watch for underlying stocks, especially Magnificent 7 and big tech, because this past week was very, very green, but the concentration was also on Magnificent 7 companies. So hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like and don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining and, of course, getting access to all the members-only private videos. This right here is literally going to be all the benefits, including over 40 plus members only private videos that you can access and unlock, and Excel spreadsheets are also going to be included with our volatility spreadsheets, intrinsic values, S&P 500 valuations, and also all the Discord channels, including trade alerts and ideas and options alerts and discussion channels as well. So links are going to be down below. There is a 16% annual discount that's available till the end of November. So this right here is where we are with the volatility. First, I want to start here. I want to start with the VIX because we are coming down to pretty low percentiles. We are coming down to 26.74 percentile right now, which in this example is still normal right now. It's not until we drop below, I think 12 or 10 is that threshold that we have kind of marked as a very, very rare occurrence in the volatility. And the current read is a little bit over 14, as you can see over here. So 14.18 is where we are. We still have a little bit of ways to go. So this right here is the red rectangle that I've marked. Anything that's under 12.5 coming down to really, really low double digits is when we have to be ready and be prepared for a potential spike in the volatility once again. And we all know when that happens, when the VIX spikes, we do see that market rolling right back down. We got up to as much as 20, 25, 23 levels. And since then, this has just been a straight up decline in the volatility, which has obviously resulted in the markets pushing higher because of that inverse correlation, which we have also talked about is negative 0.6196 or negative 0.62, just to round things up. And that's with the NASDAQ. With the S&P, it's a little bit higher. But the bottom line is there is that negative correlation. Something to keep in mind because we've talked about when the VIX gets high, it's time to buy. When the VIX gets low, it's time to go. And right now, there is maybe a little bit more potential downside for the volatility next week. Also, we've got inflation numbers coming out. So it's going to be very, very interesting to kind of see how volatility trades and, of course, what ends up happening in the markets as well, as we are starting to see that breakout. But we're also doing that on the back of very, very overbought technicals, which I'll go over in this video as well. Now, going over to NCTH reading, which is the NASDAQ 200 SMA stocks. In other words, how many stocks, what percentage of NASDAQ stocks are currently trading above their 200 simple moving average. And you'll notice that the market breadth wasn't really there. It's not there. We're only 33%, meaning that despite the strong rally in the NASDAQ last week and the week before, so 2 consecutive green weeks, we still have 2/3 of the NASDAQ. In other words, 67% of the NASDAQ stocks are still trading below their 200-day simple moving average. So the market breadth is quite weak, and to give you a little bit of a visual representation of that, you can see the last 1 week where liquidity came out of and where it actually ended up going, right? So you do have NVDA, Microsoft, Apple, Amazon, Google, Meta, all these stocks kind of sucking up that liquidity once again, and it's coming out of real estate, it's coming out of energy, it's coming out of healthcare, it's coming out of financials, it's coming out of utilities. So again, those are the sectors that were red, and a lot of it flooding back over to big tech. So Magnificent 7, once again, that's why 2/3 of the market's still very much in a downtrend, trading below their 200 SMA. And right now we're in the 23.79 percentile, which again is a little bit normal. And again, all these spreadsheets and these data-driven analysis is going to be available with the link down below on our Patreon. You can access all the spreadsheets, including the intrinsic value and the S&P 500 valuation as well. Now, this right here is a short-term market breadth indicator that we look at, which is S&P 500 stocks trading above their 20-day moving average, right? Not the 200, but the 20-day moving average. This is simply 4 weeks worth of trading activity, or almost about a month, because every month has 4 trading weeks, 5 trading days in a week. So we're looking at 20 trading days, and you'll notice that right now it's sitting at just under 68%. So in this example, we have 2/3 of the market trading already back above its 20-day moving average this past week. This is the weekly time frame. Actually, this is the daily time frame. We were up a little bit over 16%. So, of course, a lot of stocks pushing back higher over their 20-day moving average. But the important thing to note here is that we are still inside this red rectangle. As you'll notice, every time we come up to that red rectangle, yes, we do spend some time here, right? So we like to hang out in this area for some time, but then eventually what ends up happening? Every single time, you can go back in history, look at this data, look at these statistics, and you'll find that every single time we do end up seeing that short-term pullback in the market. This is not a surprise. This is not something new. We've experienced this time and time again every single time, right? So right now we're just coming up to that red rectangle again. It's possible that we do spend some time here. We do see a lot of participation, a little bit more momentum, but eventually we do expect it to once again give us a little bit of a pullback considering the markets are becoming overbought from a technical standpoint. And that's the whole idea behind this types of analysis, right? Look, there might be disagreements with where the markets are headed in terms of the momentum, but we can't disagree with factual data that I'm presenting here, basically suggesting that, look, we are inside this red rectangle. It's possible that we spend some time here. I'm not doubting the idea of the possibility that markets, push higher a little bit further. We do see some more momentum, but there will be an opportunity for us to look at the short side as well as we become a little bit more on the overbought side. And, I get some pushback in the Discord as well. And look, I'm invested long. I'm not shorting the market, right? I'm 80% invested and I'm long from an investment standpoint, from a thesis standpoint. I don't want the markets to come down, right? I would love for the markets to just straight up go back to all-time highs and for us to see parabolic moves of 50 to 80%. I would love that, right? But I also know that that is not realistic. That is not going to happen. That is not a possibility in the markets ever. Markets moves in cycles, right? We see higher highs, higher lows. We see lower highs, lower lows. And we see that cycle play out. And that's exactly why we have to be aware of where we are in that cycle. If you are getting overbought, I'll call it. If you are getting oversold, I will call it out. Now, this right here is S&P 500 stocks trading above or below their 50-day moving averages. This was up 20%. So as you can see, the red rectangle again over here is going to be somewhere between about 70 to 80%, as much as 90%. So obviously this number will never go above 100% because you can never have more than 100% stocks trading above their 20 or 50-day moving averages. But we have seen a very nice, good bounce from low 7s to mid 11s. So basically in the low double digits to high singles. And we've seen a very nice move up in the last couple of weeks. We still have a little bit more momentum to go back higher, right? If more stocks participate, if more stocks push back above their 50-day moving averages, it's possible that we kind of retrace back up to this red rectangle and spend some time there, eventually starting to see a bit of a pullback similar to what we have again experienced in the past for these market breadth indicators. Now, 50-day moving average, again, this is a little bit of a closer look. And like I said, there is some potential upside left in the markets, and that's exactly what we are going to discuss. Now, this is the other number that I was quoting earlier, 33.66. And again, you can see that every time we come up to this red rectangle, we start to see a little bit overbought conditions. We're not there yet. We're bouncing off of these levels here. Last couple of weeks, since July, the market's been on a downtrend, and in the middle of October, we kind of found that base, and since then, we've been moving higher, and this exactly is I think this is the weekly chart now that we're looking at. Yep, so the weekly chart, and it was still down. Surprisingly, it was still down 8.4%, and that just goes to show that even though the NASDAQ was higher, the percentage of stocks retracing back up with their 200 SMA is still down on the week. That, once again, shows you what? Concentration in big tech, money moving out of other stocks, moving into Magnificent Seven once again. And as a result, this index was down. But like I said, if there's more broader participation in the markets and more stocks in the NASDAQ start to move higher together, then there is possibility for us to retrace back up to 40, 50, 60%. And that's going to lead to more potential upside for the NASDAQ. But on a shorter time frame, 20, 50-day moving averages, we are getting a bit more overbought. Now, this right here is going to be the FANG index, or basically the Mag 7. So this right here is the Mag 7. This is all of your Apples and Amazons and Tesla, NVDA, Microsoft, Google, and Meta. And you'll notice that we talked about, the potential for this bull flag. I asked you guys in a couple of weeks ago in the technical updates whether you believe this is going to be a bull flag or not. The last couple of weeks have definitely suggested a nice validation of pushing back higher, kind of validating that bull flag a little bit. And we're starting to see a bit of a breakout. So this past week, we started to creep above that resistance of 1860. So of course, 2022 was brutal, lower highs, lower lows, boom, boom, boom. This right here is a pole and a potential flag formation here. And of course, if you do see that continuation, if more concentration happens in Magnificent Seven, if there's continued momentum for these big tech, large cap tech stocks, and there's a possibility for us to see a breakout beyond this level. But there is going to be a resistance level to watch for this FANG index, and that's going to be sitting right over here. So that, I believe, if you go across a little bit, is going to be sitting roughly at around 1900 to as much as 2000. And that 2000 level is going to be also in line with this all-time high for the market, for this particular index. So that is really the level to watch. If you do get a very nice breakout above this, well, then tell you what, Magnificent 7 for the win. They're single-handedly, they're all going to take the markets to higher levels and potentially to new all-time highs. We'll find out. But right now, I can tell you this past week, a lot of liquidity getting sucked up in concentration of Magnificent 7, and they're the ones that are actually driving this move higher. Speaking of, right, so now let's jump over to these Mag 7s. Apple here, massive move and a very strong breakout above this previous resistance of 180, 179.95 to be precise, and now getting up to this resistance, going to be that next hurdle, that next target at close to 189 to 190 bucks. So this right here, that red line, is going to be that next target to watch. But again, I do want to point out that look at the RSI, look at the MACD. This is just incredible amount of overbought conditions that we're seeing on Apple stock. Now, one more thing I will mention is that just because the RSI is getting up to almost 70, right now it's at 69, that glorious number. If it gets up to over 70, yes, it's going to be overbought from a technical perspective, but Apple has historically been trading at these levels, or it has been, you know, coming up to 70, then dropping back down to 65, 70, 65. It's been hovering in that range for quite some time. In other words, the markets can remain irrational longer than you can remain solvent. So just because the markets or technicals suggest that something's overbought doesn't necessarily mean that it's a ripe for shorting opportunity. It can stay up there for a very long time. And look what happened for Apple during that entire period. It continued to blast off to newer all-time highs, even though the RSI was staying up there at an overbought levels. So we have to look at these things, you know, on an aggregate basis. Just because the RSI pushing higher doesn't mean that, you know, next week's going to be red and Apple's going to start rolling over. But it's something to keep in mind. Of course, 190 bucks is going to be that next resistance level to pay attention to. And when we combine this with volatility, with market breadth indicators, with the yields and how they're performing, that's when the trade idea gets formulated. So that's what we're going to be paying attention to. 190 bucks is going to be that next resistance to watch for Apple. I would say that it's now starting to form very nice higher highs. All we have to wait and see where that next higher low ends up being. So this right here would be the new trend or the new direction for Apple that it's going to make moving forward. Amazon, same exact thing. So we were all, you know, in this downtrending channel until this huge breakout happened in the last couple of weeks, and this is the entire move. RSI, once again, you can see that we're pushing higher. So is the MACD. Similar to Apple, it's been, you know, at these levels, overbought levels for quite some time, and during that entire time, Amazon continued to push higher. So just because we're overbought doesn't mean that it's, you know, good shorting opportunity. And the next target is going to be $146. So this right here is going to be that level to watch for Amazon. We'll find out whether we get a breakout above this level or get a rejection. And this is really where that bull flag comes in for FANG stocks, right? For Magnificent 7. If Amazon breaks out above 146, if Apple breaks out over 190, if you know, NVDA breaks out over 500, if AMD breaks out over 120, which I'll go over in just a minute, all these is going to create that breakout over the bull flag that we're talking about here for Magnificent 7. But if you get rejected, it's possible that, of course, this right here, this entire index is also going to roll over moving forward. So moving along, we've got Tesla here. Tesla is still very much in the context of a downtrend. So I would argue that Tesla is one of the only Magnificent 7 companies that is still trading within a downtrend. Apple shifted its trend with a higher high. Amazon shifted its trend with a higher high. But Tesla, unfortunately, is still within the context of this downtrend. You know, making lower highs a couple times, getting rejected, boom, boom. This right here is the lower lows, getting rejected, boom, boom. And of course, support level, massive support, massive amount of demand sitting in the low 200s with a huge amount of supply sitting in the $275 to as much as $300 for Tesla. Looking at Microsoft, now Microsoft is probably the only one that scares me the most. Yes, it's making higher highs and a very nice uptrend here. But man, look at the RSI here, over 74 with the MACD absolutely exploded to the upside, and of course the price action making a new all-time high. So again, I want to point out that it has, you know, stayed at these levels for longer, for some time. You can see the entire time the RSI was overbought, price was pushing higher. So it is possible that the RSI stays up there for longer, but eventually I can tell you from his experience and from historical charts that eventually it will come down. It's not going to stay up there forever, right? It's not sustainable. It's not sustainable for any stock that I'm going over today. Apple, Amazon, Microsoft, AMD, NVIDIA. It's not sustainable for them to be overbought forever. They are going to pull back. They are going to basically see some type of correction, whether that's going to be next week or a few weeks from now. That is the real question. To which the answer, I don't know exactly. But the risk reward is getting only better and better as prices continue to move higher from a shorting perspective, right? From an SQQQ perspective, the risk reward's only getting better as prices continue to go higher and markets continue to stay overbought for longer. That's the analysis, and that's, of course, going to create a nice potential trade idea in the future. Now, moving forward, this right here is Advanced Micro Devices. Same exact story. You can see a very nice move to the upside last couple of weeks. RSI here over 70. MACD also been pushing up. The last time we were at 70 was when AMD was at over $130. And, of course, we saw, that incredible amount of sell-off after, and the RSI also rolled over, right? So it's not a coincidence. It's something that's how technicals work, and we've gone over this over and over again. So keep in mind, where we are from a technical perspective. The next target is going to be $130, but that's only if you break out over 120. So 120 is going to be that level right now. 119 is where we're at. So if you break out above this resistance, then it's possible the next target is going to be $130. And at these prices, I mean, AMD is going to actually become a very good potential for selling covered calls or shorting opportunities because that's a previous resistance. Overbought, very, very conditions will be very overbought. And then, of course, it's possible that we roll right back down. So those are going to be some levels to watch, and very, very nice move to the upside. Now trading within the context of a higher high and higher low pattern within an uptrend. Same thing with NVIDIA. So I hate to break it to you guys, but this right here is the previous resistance, and now we're approaching that resistance again. RSI 67, MACD also pushing higher. So not exactly overbought, quote unquote, but it is getting up there. And once again, you can see that it was overbought for a very long time, and that entire time it was pushing higher. So stocks again can remain overbought for longer before they start to pull back. But one thing is for certain is that they will pull back. We just don't exactly know when that's going to happen, right? A lot of them are actually hitting their resistances. So we're going to find out next week, next couple of weeks, if the momentum kind of shifts back lower. But as we know, with yields coming down a little bit in the last couple of weeks, there's been a lot of liquidity flooding back over to Magnificent 7. It's been a little bit more on the risk-on environment here. This right here is Meta Platform. So Meta also approaching its resistance. Boom, once, twice, and 3 times. And that's exactly where we are between 315 and 330. Next target is going to be all the way up to $350 per share. RSI not quite overbought, sitting a little bit over 63, but it's certainly getting up there. And the MACD also moving higher. So it's possible. Meta, I would be a little bit more confident that it does break out, above this level, above $330 to push up to $350 for this company moving forward. So that's going to be it for today. I hope I didn't miss anything. I went over Meta 2, 3, 4, 5, 6. That's only 6. Who am I missing? I'm missing Google. Yeah, I didn't go over Google, right? So let me just go over Google here. There we go. So Google here also moving higher very nicely. RSI MACD similar to Meta. Actually, Google does have a little bit more potential, and I actually wouldn't be surprised if Google ends up, close to as much as $134, $135. So that right there is going to be actually 139 to 140 is going to be that next resistance. So basically, this level right here is going to be that next target to watch for Google. I feel like I'm missing one more. Where Apple, Amazon. Yeah, it was just Netflix. I think it was Magnificent 7, right? So Google, Amazon, Apple, Tesla, it's 4, 5, 6, 7. Yeah, we went over all the 7, including Google. So that's right there going to be the technical analysis. And, the bottom line right now, unfortunately, is that we are still very much in the context of, in other words, we were in a context of a downtrend. We broke out this past week, 4,400 on the S&P broke out. NASDAQ broke out over 13,007. So if I go over the technicals for the indices, what you'll notice is this right here, the breakout. And the next target is going to be 4,500. Very, very important level for the NASDAQ, for the S&P. And the NASDAQ is going to be closer to 13,875 to as much as this level at 14,200. But in that process, right, getting up to that process, I do believe there will be overbought conditions where stocks are going to find it more and more challenging, more and more difficult to continue to see this rally before starting to pull right back down. It may just be like a short-lived pullback and a higher low. That's what we're looking for, a higher low, and then kind of retracing and kind of recovering back higher. But we just can't expect the markets to sustainably keep pushing higher in a single line because they move in cycles. It's possible that we do see a pullback and then recover back up to continue that momentum back higher. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe and also join our Patreon, Discord. Link's going to be down below. You can unlock and watch a lot of the members only videos, access all of our spreadsheets, access all of our Discord channels. So link's going to be down below. As always, happy investing. I'll see you all in the next video.